Besides the criminals that the mainstream media loves to point out, there are a large number of legitimate individuals who are in this cryptocurrency space. In fact, there is a growing number of investment firms and hedge fund managers who have identified the risk-reward profile for cryptocurrencies as being so high that it would be foolish not to gain even just a small amount of exposure to this brand new asset class. We're getting into it today, so don't go anywhere. First, let me point out this beautiful fact that Bitcoin does not require big investors for it to continue to function. But for those of you who might be curious as to who else finds it very beneficial to be holding Bitcoin, I've got your back. First and foremost, let us remember those people who you've heard talking about Bitcoin for several years now. And maybe you should be paying a little bit more attention to what they're saying. Maybe not every single little thing, but at least for this, you can regard them as an early adopter. By that, I mean that they are able to spot the potential of something before it gains the approval of the very in-the-box thinkers that are always in the news. Not only can early adopters spot that potential, but they can also recognize the very high risk-to-reward ratio that is represented in these cryptocurrencies. A high risk-reward ratio means that you don't have to risk very much to see a very good potential return on that investment. Now, Bitcoin introduced a brand new asset class to the world, which by the way is very much smaller than what we're used to, like for example, the Forex market, foreign exchange market, the international currencies, the trading of those, or for example, precious metals or real estate. And there are certainly benefits to getting in early, but what it takes to get in early is having a contradictory mindset. Again, not waiting for the approval of others. If you want to be ahead of the trend, you can't wait for the trend to confirm itself. That is where a bit of the risk comes in. But if you have your finger on the pulse of where the market could go, it's very easy to align yourself to benefit from that knowledge. And again, let's not forget, it takes an awful amount of fortitude to put your money where your mouth is, especially going against the trend. It could be kind of tricky, but that is the skill set of an early adopter. Okay, so we've got the criminals, we've got the forward-thinking, innovation-supporting early adopters, but who else is investing in Bitcoin and cryptocurrencies in 2020? One of the biggest public buyers of Bitcoin and Ethereum has been the cryptocurrency investment firm Grayscale. And when I say one of the biggest public buyers of Bitcoin, I'm saying they have purchased over 33 or just about 33% of all mined Bitcoin in the past 3 months or 100 days. That's over 60,000 Bitcoin. And if you average that out per day, that's about 607 Bitcoin every day for the past 100 days. Additionally, they've also bulked up what they're holding for Ethereum to the tune of over 756,000 Ethereum. That's just under 50% of all Ethereum that's been mined so far in 2020. So you might be wondering, well, what the heck is Grayscale? Grayscale, again, is a cryptocurrency investment firm that runs about 10 different investment instruments like ETFs, which allow for institutional investors to gain exposure to the price movements of these cryptocurrencies without actually having to hold on to them themselves. Now, in my opinion, for those of you who are frequent viewers of this channel, hopefully you know what I'm going to say here. But for those of you who are new, in my opinion, this form of participating in the cryptocurrency space, of only wanting to gain exposure to the price movements of crypto without having the ability to take advantage of all of the other attributes that this borderless, peer-to-peer, censorship-resistant, unconfiscatable asset. You're only half participating, not even half, like a quarter participating in this space in this way, but at least they are dipping their toes in, and at least there's that. Talk about institutional investors, companies like Blackrock. This name might be ringing a bell for you because they have very recently been hired by the United States Federal Reserve to help manage all of the assets that they have been acquiring thanks to their enactment of unlimited quantitative easing. This has allowed them to purchase so many assets, they need to hire an outside firm to help them manage it. Talk about a great position to be in for BlackRock. They've got the ear of the Fed. They can go ahead and advise them on any other assets they think the Fed should be investing in, if they have any buddies in either real estate, the stock market, what have you. But I'm sure that their awareness of that unlimited QE, unlimited quantitative easing, also known as unlimited currency printing for you US citizens, that means unlimited printing of the United States dollar, the USD. If you know anything about scarcity, that is a great help for allowing any currency to have any value whatsoever. And to think that it has an unlimited supply, the exposure of BlackRock to that reality and how that is playing out, I would be remiss if I thought that they weren't interested in hedging themselves against the inevitable inflation and possibly hyperinflation that could and always results from unlimited money printing. By doing so, by investing in the hardest asset that has ever existed, that is hard-coded, that is a sovereign asset, cannot be influenced by any government official, any politician, any single entity, cannot ever make Bitcoin be printed more than it has been designed to be. 21 million Bitcoin, that will always and forever be the limited supply of Bitcoin. Speaking of hedging your investments and hedging against inflation, hedge fund managers, notable hedge fund managers, Raoul Pal and Paul Tudor Jones, have both been raising their voices and their approval for things like Bitcoin and certain other cryptocurrencies during this time of extreme economic stress and the reactions that we're seeing in, again, the likes of unlimited quantitative easing and even negative interest rates in Europe. Both of those situations, again, the unlimited currency printing and the negative interest rates, should send people screaming for a safe haven. Look no further than Bitcoin and precious metals. Gold and silver have been long-standing hedges against inflation, and that kind of history certainly lends itself to the argument of their existence and their utility for addressing that particular scenario. But now we live in a world where Bitcoin exists, where Bitcoin is a digital currency. It is a hard-coded supply. We know exactly how much Bitcoin will exist. It is borderless. It is peer-to-peer. It has a decentralized network that cannot be controlled or maintained or have any kind of a price limitation based on one centralized entity. It is unconfiscatable if you do it right. And there's a lot of beautiful attributes to Bitcoin and certain other, especially the privacy-focused cryptocurrencies. Let's just say it is a whole new way to hedge. That's going to wrap it up for today's video. I hope that you found this informative, and hopefully maybe it'll inspire you to try to be a little bit more of an early adopter whenever that opportunity should present itself to you. If you enjoyed videos like this, I appreciate it if you leave a like, hit subscribe with the bell notification so you can know when videos like this come out, and also so you can know when I go live. Toby and I, my husband Toby and I, we go live every Monday at noon Eastern time. Don't miss it. We'll be there again this Monday. We'll see you there. Have a good one.